morning and welcome to Business Morning. I'm Chimeze Obi Iwagu.
And I'm Ladi Williams. Thank you for joining us. Let's take a look at what's in the news. House of Representatives is mandating its committees on finance and agriculture to investigate the federal government's disbursement of loans and credit facilities to farmers from 2009 till date. The House observes that since 2009, 275 billion naira is said to have been disbursed to farmers, yet the country cannot boast of food sufficiency. The House is also concerned that most farmers have not been able to access the loan due to stringent procedures by banks. Let's take a listen.
It's Wednesday's plenary session in the House of Representatives. Lawmakers consider a number of investigative motions, one of which is the federal government's agricultural loans and credit facilities to farmers since 2009.
Aware that since the approval, most farmers have not been able to access the loans due to stringent requirements being demanded by banks from prospective borrowers and the alleged siphoning of over 105 billion naira meant for farmers by management of the NISAL.
The House also considers a matter of urgent public importance on the need for the Central Bank of Nigeria to urgently put in place monetary policies to stop the free fall of the naira.
Worried that enormous and rapid devaluation may scare off international investors, it makes investors less willing to hold government debt because it effectively reduces the actual value of their holdings. Mr. Speaker, the House therefore resolves, 1, to urge this honorable House to direct the CBN to urgently put in place a policy to check further devaluation of the naira, direct the House Committee on Banking and Currency to ensure compliance, as well as report back to the House for 2 weeks, in 2 weeks.
Meanwhile, a Senate bill for an act to amend the Asset Management Corporation of Nigeria Act is stepped down by the House after members questioned the clause which allows banks to recover loans by taking over properties traced to debtors, whether or not such asset or property was used as collateral for the loan.
This new bill empowers the Commission to go after any other property that you have that was not initially part of the agreement. And I think that this issue was raised, and we need to know what has been done before we concur.
Mr. Speaker, I also believe that some of the concerns raised here are germane and genuine. So in order for us not to throw the baby along with the bathwater, I, as mover for the second reading of this bill, would like to step down this bill and interface more with the Senate.
The bill was passed by the Senate in April, despite disagreements on the same recovery clause by senators. Terry Ikumi, Channels Television News.
And oil giant Shell is urging the federal government to pass the long-awaited Petroleum Industry Bill by end of June to drive more investment in the country's petroleum industry. According to Shell's Managing Director for Nigeria, Mr. Bayo Ojulari, the commitment of the government should go beyond words of mouth. He explains that there is a need for collective implementation of the energy transition to enable the PIB remain effective once it is passed. The Senate had given an assurance that the bill will be passed this month once the Joint Committee of the National Assembly on PIB concludes the report and presents it before lawmakers.
Meanwhile, oil prices slid this morning as inventory data in the United States, the world's top oil consumer, showed a surge in gasoline stocks that indicates a weaker than expected fuel demand at the start of summer, country's peak season for motoring. Brent crude oil futures were down 34 cents at $71.88 a barrel, while U.S. oil futures declined by 36 cents at $69.60 a barrel. U.S. crude oil stockpiles, that include the strategic petroleum reserve, fell for the 11th straight week as refiners ramped up output, but fuel inventories grew sharply due to weak consumer demand. According to the Energy Information Administration, another development weighing on prices is Libya's Waha Oil Co. that aims to return to normal output operations today after fixing a leak on a pipeline that more than halved the company's oil production.
Okay, there will be more update on the commodities market in a moment with Dumebi Iyeke, research analyst with Financial Derivatives Company, in a moment. Do stay with us. This is Business Morning.
The Dangote Petroleum Refinery is going to be the largest single-train petroleum refinery in the world. Dangote Industries have enormous confidence in the potential of Nigeria. Africa is like an unexplored gold mine. We know there is huge opportunities here.
What makes this project different than others is for sure the size. This project is transformation for the country and for the continent, I would say.
The Dangote fertilizer plant will transform the agricultural sector. We go for the state-of-the-art technology. It will help to create employment and to reduce the massive demand on foreign imports.
It's going to have a major impact on the lives of the Africans. It's a moment of great pride.
The following measures are crucial in the fight against COVID-19. Maintain 2 meters distance between yourself and anyone who is coughing or sneezing. Cover your mouth and nose with your bent elbow or tissue when you cough or sneeze. Then dispose of the used tissue immediately. Do not touch your nose, mouth or eyes. Remember, avoid physical contact with people. Simply greet with a wave, a nod or a bow.
For a continent rich in storytelling, news can sometimes be hard to find. Network Africa takes you deep into the heart of the continent, covering Africa like no other, with correspondence and analysis from across Africa and the world. Come with us on a journey to Africa as you know it, and what it could become. Network Africa, weekdays on Channels Television.
Welcome back. Still watching Business Morning. Dumebi Yeke now joins us for the commodities update. Great to have you, Dumebi. Good morning.
Good morning. Thank you for having me.
All right. So Brent currently above $70 per barrel. What is your outlook for global oil prices? Seems the bull run seems to be,
fading away.
Fading away gradually.
Yeah, I mean, all markets are very sensitive. Whatever news comes up, whether in the U.S. or China, always has something to do with the oil markets would always react some way or the other, either positive or negative. Outlook for oil right now, we expect oil prices to actually trade around $67 to $70 per barrel. That's still good for Nigeria, but in the end, it simply means that we see oil prices falling from what it currently is trading at. Why? Because we have an outlook that oil supply would increase. OPEC has, maintained its ease on output costs, so there is going to be an increase in oil supply in the coming term. And there is the fact that the U.S.-Iran deal, would come into play, and that means that there could be an increase in oil supply by about 2 million barrels. So 2 million barrels per day. So all of that put into place, we could see oil prices fall from what is currently trading at or remain at $70 per barrel.
Okay, talking about the outlook for the oil market now, well, just recently the World Bank released its global, regional, and of course domestic outlook.
Yeah.
Looking at the underlying assumptions, how would that play out, on the commodities, global commodities market, of course, which includes oil here?
I mean, in the beginning of the year, we've seen that global commodities have been increasing, be it copper, grains, we've all seen those prices increase. At the end of the day, the underlying assumptions for the World Bank, first of all, for the global economy, is that the global economy would recover, and if it happens that global growth increases about 5.6%, according to what the World Bank is saying, this will be the fastest post-pandemic growth in about 80 years. And the underlying assumptions are that number one, a few, advanced economies like the U.S. and China would actually push this growth. Regionally, that's with focus on sub-Saharan Africa. Definitely, several economies within the region will still continue to struggle with the COVID-19 pandemic, high debt burdens, and that would reflect in the GDP growth for the region. A very significant thing is that the dominant economies, South Africa, Nigeria, Angola, are still, struggling with sluggish growth, and that's going to, eventually tell in the direction of growth for the region. Now, bringing this home to Nigeria, the World Bank has, revised upwards its forecast for Nigeria to 1.8% from 1.1% it was forecasting as at January. At the end of the day, their assumptions are, number one, they're assuming higher oil prices. Number two, they're assuming structural reforms in the oil sector. Number three, they're assuming a flexible exchange rate and market-driven exchange rate regime. And number four, they're assuming that vaccinations would pick up by the second half of the year. All of these assumptions are good. We're seeing things happen in this regard. But the big question is this: is this sustainable, and how much of an impact would this have on government revenue, on forex supply, on commodity prices? And eventually, how would this affect the commodities market? In a situation where we're seeing oil prices trade at $70 a barrel, good news, by the end of the day, Nigeria's break-even point to actually have enough revenue to meet domestic needs, to meet capital expenditure, is $138 per barrel.
Wow.
Will all prices get to that point? That's a very big question.
Number.
A very big question.
So if these assumptions are not met, then...
If these assumptions are not met,
we can't expect anything.
Exactly.
All right, so still on global happenings, the U.S. inflation data for May will be released today. Consensus forecast has risen from 4.2% to about 4.7%. What does this mean for Nigeria?
That's a very good question. So the U.S. inflation data, like you rightly said, will be released today. Consensus forecast 4.7%. And the U.S. Fed, we've seen their opinion that inflation in the U.S. is transient, meaning that's just for a short period of time. But, analysts have come forward to say that this could actually be persistent. We could see an aggressive rise in the U.S. inflation. And if this happens, that eventually U.S. inflation increased to about 4.7%, the U.S. Fed will be under pressure to increase rates. They'll be forced to increase rates. And if they increase interest rates, that is, they move away from their accommodative monetary policy stance, we could see other central banks move in tandem. And what this means is a global rise in inflation rates. And if global inflation rates increase, Nigeria's debt service costs would also increase. And that's terrible news for Nigeria.
But of course, looking at Nigeria, we already have high inflation. We've seen it galloping, even though we saw that tapering a little bit. But then, from your forecast for May, you're expecting the May inflation to inch up, a little bit. In other words, what we saw in April is just a blip.
Exactly. From our forecast, we're projecting rather that inflation would increase to 18.2% in May. Why? Because of the underlying factors of supply chain disruptions, insecurity affecting food supply, a continuous increase in food prices, the effect of the planting season, the exchange rate pass-through to imported commodities. All of this, will continue to affect food inflation, and that in turn would continue to affect headline inflation.
All right, so Lagos is on the radar today. The commercial hub of Nigeria and the top destination for capital import is now the second worst city in the world. Incredible. According to EIU, why is this so? And do you see any improvement to these numbers anytime soon?
I mean, concerning the improvement, we just have to keep our fingers crossed and hope that whatever policy the state governments would take up in terms of infrastructure, in terms of healthcare, in terms of economic stability, would actually pull through and in turn, move Lagos State up the ranks. So the EIU actually did this survey between February and March.
But then one would wonder what they must have seen to declare Lagos as the second worst city.
Yes, so their survey actually cuts across three to four ranking indexes. So we have the stability, that's macroeconomic stability, you have healthcare, you have education, and you have consumer expenditure, or rather the living standards of people within the state. So basically what they're saying is this, that economic stability or macroeconomic stability within Lagos State is really low. What they're also saying is that the healthcare facilities within Lagos State, needs to improve. Education within Lagos State needs to improve. Infrastructure also needs to improve. So at the end of the day, in summary, what they're pointing towards that living standards within Lagos State is deteriorating. And it's not far-fetched. If you look at the average Nigerian in Lagos State, even if you're earning about 250 to 300,000 naira monthly, how much of this can you really say is for yourself? Food prices are increasing.
Well, that brings us back to the issue of the inflation.
Exactly,
that
food prices are increasing. There is so much traffic in Lagos State. During the rainy season, there is flood. And even if we're seeing an improvement in infrastructure development, we see that they're embarking on several road construction and all of that. The question is, the big issue is this. All of these things are happening simultaneously. And how is that affecting the individual who is going to who has to be productive enough to increase outputs that will tell in our economic stability within the state? If you're going to work, you're spending about 3 hours going, 3 hours coming. Your productivity is going to be low. And now imagine the countless companies within Lagos State who are, who their output depends on how effective their workers are. So if productivity is low, that would eventually tell in our
But is it that Lagos is not making enough money?
No, if it is by revenue, Lagos State is doing well compared to other states in the country. Our IGR is, Lagos State, the IGR of Lagos State is really high. If you also look at the forex inflows or capital imports within Lagos State, it's really high. So by numbers, Lagos State is doing okay. But at the end of the day, when we look at it from a developmental economics perspective, when you look at the living standard of individuals within the state, it's relatively low. And the index that we're using, that the EIU used for this, are the basic human development indicators. Health, education.
What do you think the Lagos State government can actually do to reverse this trend? But then, can they really actually do it alone?
I mean, it just means that we have to go back to the basics of economics. Number one, how can you alleviate people from poverty? You have to create jobs. How can you create jobs? You have to encourage investment. And for you to encourage investment, your environment has to be safe enough for business operations. So if companies that want to run businesses, they don't feel safe, they would stay off. Also, you have to recognize the fact that you also have to encourage food production within the state, and ensure as well that health infrastructure is improving within the state. So, and also, to an extent, you also have to look at the population. How can you meet up with the demand of the people within the state? Because at the end of the day, by the time you look at the infrastructural resources in Lagos State compared to the population or the amount of people living in Lagos State, it's really high. So there is a lot of pressure on infrastructure within the state. How can the government be able to, meet this requirements and ensure that, okay, we have this amount of people living within the state. How can we ensure that the available resources are efficiently allocated to these people?
All right, so let's look at this foreign trade data now. Confirms that manufacturer concerns of not having access to, raw materials. What do you think is driving this?
The basic, they have issues with, forex. A lot of our manufacturers import most of their raw materials, and if they're importing their raw materials, the fact that the naira is depreciating, the fact that they have low access to forex will, definitely tell in their sector activities. And over time, from the FBN PMI report in March, it was clearly stated that the manufacturers are complaining about this. And why is this a problem? If a manufacturer that would normally uses about let's just say 80% of their revenue to import raw materials, which is a hypothetical analysis now, use 80% of their revenue to purchase raw materials, and they have to import these raw materials. They're getting about 10-20% of their forex from the official sources, and eventually have to get the remaining 80% from the parallel markets, which is a lot more. So their blended rate, the purchasing forex at a blended rate of about 477 or 480 naira per dollar. That's a lot, and big. Each time the naira depreciates, it affects their ability to purchase, raw materials, because it's going to tell in their import costs, and that will eventually tell in the commodity prices.
All right. Thank you very much, Dumebi.
Always great to have you.
Always great to have you.
Thank you so much. Thank you.
All right. We do appreciate your time. Okay. We take another break, and when we come back, we look at a few developments in the market. Keep it here with us. This is Business Morning. And the Securities and Exchange Commission is proposing new rules that would guide intending issuers of bonds. This is in a move to ensure that Nigeria and Nigerians benefit from the fast-growing global social bonds market, currently estimated at $85 billion. All right, let's talk more about this and other market developments with Akintoye Oyelakun, investment analyst at Codros Asset Management Limited. Thank you very much, Akintoye, for joining us.
Thank you very much for having me.
So let's understand what social bond is all about and why it's important for Nigeria to key into it.
Yeah, so social bond is a very critical bond in today's society, given the impact of COVID-19 around the world. So what most economists are doing now is to use social bond to effect change in environment or societies where people have the lack of access to basic social amenities. How this works is that the federal government, for instance, may want to resolve some social infrastructure gap in some communities. And what this the federal government would do is to appoint an intermediary. This intermediary will then look for investors, social impact investors. Then they will gather these funds together and then disburse it to non-profit social service providers. So these social service providers are already into that business before, but now they're able to scale up because of the access to capital. They go to these communities and then they implement these social projects, which could be around maybe health facilities or maybe access to waters or any other social project. So once this social project is completed, there's going to be an independent advisor. So this advisor is going to assess how efficient these projects have been in terms of solving the problems that are faced in these communities. So once he's able to assess that these projects are able to achieve the intended use, then the advisor is going to inform the government, and then the government will have to settle the investors. But one factor that distinguishes it from other products is that unlike the normal bonds that we have, normal FGM bonds, this does not put any financial risk on the government in the sense that the government will only have to settle investors if the projects have been done efficiently to help to resolve the social infrastructure gap.
All right, Kintoye, so the SEC's new rule states that qualifying projects must promote either affordable basic infrastructure, including clean drinking water, sewers, sanitation, transport, and energy, among others. What is your view on this proposal?
Well, looking at the level of poverty in Nigeria, and some states in Nigeria are not able to have access to these basic amenities like access to water, access to healthcare system. This will definitely help to support the government in that area. So the government will be able to see more funds, especially for those social impact investors, those investors who are looking at investing in such instrument that will help them to solve social problems in the society. So it's a very good one for Nigeria if it is well implemented.
The developments in the market. Now, despite the concerns in the Asian market as regards COVID-19 cases worsening, the OPEC Plus remained optimistic about the demand outlook for the oil market. Now, in its last meeting held on the 1st of June, the members agreed to increase output by about 2 million barrels per day from May to July. Now, from an investment point of view, what does this mean for Nigeria?
Yes, it's a very good move by OPEC for the fact that OPEC has continued to support the balance of the oil market since 2020. And given the level of demand that we have seen across the world due to the rate of economic reopening and COVID-19 vaccination, demand is growing. And, oil prices have strengthened significantly, even above $70 per barrel. So this actually creates room for the cartel to start to ease production. This is what they are doing. Although looking at the output that Nigeria currently does in terms of crude oil production, it is still below the 1.8 million budgeted. While if you look at the price, at $71 per barrel for Brent. It is far above the $48 benchmark for the budget. So what this implies is that there's going to be more funds compared to what we had in 2020. There's going to be more funds for the government to meet with its obligations, and also in terms of FX inflows, as we know that we are having FX illiquidity challenges in Nigeria. This could help to also resolve that, as the CBN could have access to more FX to defend the naira across the FX windows.
All right, so the World Bank has recently raised its growth projection in Nigeria to 1.8%, up from its initial 1.1% outlook for 2021. The revision was on the back of increasing oil demand, structural reforms, and market-based flexible exchange rate management. Is this in line with CODRIS's outlook for the year?
Well, if you look at it in terms of expecting a growth in GDP, it is in line with our view. We also expect to see growth in 2021. However, if you talk about the level of optimism, we are more optimistic than the World Bank, given the fact that we expect the reopening of the economy to support the resilience of the non-oil sector. Not to also forget the fact that we had a weak base in 2020. So this will also support the rate of growth that we see in the non-oil sector. And for the oil sector, across the world, we are seeing demand strengthening due to rate of vaccinations and economic activities that we're seeing. So this will definitely support oil production, increase in oil production, and compared to what we saw in 2020, it's going to be a positive year for the oil sector. So on the back of this, we are projecting a 2.63% year-on-year growth for full year. So our outlook for the economy is more in line with that of the IMF than the World Bank.
Now, another interesting news there is, the central bank's decision to cut down on exchange rate windows. This move strengthens the convergence towards a unified exchange rate as the Apex Bank reduced the operating windows from 7 to 4. Could this move put an end to the FX liquidity or illiquidity challenges?
Yes, so the move by the central bank again shows its intention to unify exchange rates, and it's very good for the FX market, as the CBN will be able to focus more on the smaller FX segment, as we see improvement in the oil sector in terms of demand for oil, and then if prices remain relatively stronger than 2020 levels, this will provide more FX for the CBN to be able to defend the naira across this window. So in that sense, it is very positive for Nigeria. However, when you talk about the illiquidity challenges of FX, it will depend largely on how much we are able to supply across this FX windows. How much demand is the CBN able to meet across this FX window? These are the things that are going to shape the stability of naira and the availability of dollar in the country.
All right, let's look at the markets now. The domestic equities market has been bullish so far this week, despite taking off on a bearish note. Investors' optimism seems to have been reignited, with the all-share index advancing in the last 3 days. What can be attributed to this turnaround? And is this, the bearish sentiment, is it over?
Yeah, so for the equities market, like you rightly pointed out, although the equities market opened on a negative note, we have seen buying interest on Tuesday and on Wednesday. And the major driver of this is, at the previous T-bills auction, we saw the long end of the primary market auction, there was a moderation in the stop rate, to 9.65%. So this kind of gave a kind of sentiment to investors that yields at the treasury bill segment could have peaked, or at the money market could have peaked, and then looking at the fact that we are approaching the half-year earnings season, some investors are really looking into fundamentally sound stocks that have suffered significant sell-offs during the year due to the increasing yield environment. So investors are taking position in fundamentally sound stocks ahead of the earnings season in H1 2021. So these are the likely reason why we have been seeing this positive gains, positive performance for the domestic bourse of recent. And we expect it to continue. Although, talking about the bearish sentiment, it might not be over yet. Investors will still continue to monitor the primary market auctions and also macroeconomic conditions to determine whether or not there's still a possibility that yields will sustain an upward trend. And, depending on this will shape how the financial market performance is going to be for the rest of the year.
Okay, now the sentiment in the fixed income market has been, flattish since the beginning of the week, with many investors anticipating, of course, the direction of the yield at the Treasury bills auction following the outcome of the primary market auction, which you did mention. Now, the global markets, not just our market, are all focused on U.S. inflation data, which is, of course, expected to come out today. What are the risk of or risk on do you see there for the Nigerian market?
Yes, so basically for the fixed income markets, domestic fixed income market, like you mentioned, we are seeing a flattish performance for the bonds market and for the treasury bills market. While for the OMO segment, we are seeing a lot of buying interest, and the major driver has been the fact that investors were anticipating what would happen at the auction, which was held yesterday. So following the outcome of the auction, we saw another moderation in the stop rate at the long end of the curve, which implies that investors will now start to, strengthen their belief that yields at the treasury bills auction or at the money market have reached their peak level. So what this will mean is that we could now start to see some level of buying interest in the market. However, for the U.S. inflation, if inflation numbers print as expected for the U.S. Fed, what would happen is that we are going to see a reduction in the economic stimulus. We could see a reduction in the asset buyback program, which is currently in place in order to reduce the inflationary pressure. However, if inflation numbers still remain weak, below what the Fed is expecting, we are still going to see sustained support for the U.S. economy.
All right, we'll keep tracking those numbers when they come out today. All right, Mr. Akinto Ilakun, investment analyst, Cordros Asset Management. Thank you so much for your time on the program.
It's my pleasure. Thank you.
Thank you. All right, so time for our morning calls at the market with Aniete. Well, the bull had a stronger grip on the market yesterday, but however, the sustainability is still questionable. Or do you think the bear's run is over?
Good morning, Ladi. Thank you. Investors are actually smiling. I think it's time to smile for investors now, and that's because we added, compared to the 102 billion naira that we had on Tuesday, Wednesday we had a higher amount, 150 billion naira was what was gained. But when you take a look at that in percentage term, it shows you that more than half of a percent, 0.74%, that's what we gained, and then we crossed back to the 39,000 level, which we lost about about a month ago. And that shows you that there's renewed interest. And of course, we mentioned that the equities market is very, very unpredictable, as well as other markets. But when you take a look at it, it was a green arrows across board, especially it was led by banking and as well as the industrial goods sector. They went up by more than 1.2%. And that's attributed to gains recorded by Dangote Cement, GT Bank, Okumu Oil, Lafarge. And then was actually a very wide number, 26 gainers, 25 gainers against 6 losers. That shows you renewed interest from the part of investors. That's, of course, not forgetting that the prices of these stocks had gone about to their intrinsic level. But when you take a look at the volume of transactions down, it was down by 16.9%. Also the deals, but the value was higher, and that's because of Zenith Bank was the most traded by volume, and then Nestle, those are the high cap equities. Now, but when you cross over to the unlisted securities market, it was another bearish trend, and as well as the debt market. But yesterday, the CBN rolled over more than 90 billion naira in maturities. So to bring us up to speed with that primary market auction, let's join Babajide Solanke, who's a fixed income trader at FSDH Merchant Bank. Thank you for joining us, Babajide.
Thank you. Thank you for having me. Good morning.
Now, we've been seeing more of a bearish trend at, for the treasuries market, and then, of course, the outcome of that primary market auction. So can you bring us up to speed on that?
Yes, at the primary market auction, there wasn't any bearish trend. We saw more aggression in terms of people wanting to hold government securities. And we can see that because the government actually via the central bank actually sold more than they offered. But there was a marginal drop in the longest end, which is 364 day from 9.65 to 9.64%. So what we're saying is we've seen aggression, how the primary market auction, why the secondary market remains bearish. And the reason is because of the significant drop in liquidity, particularly for the secondary market. The primary market, we just want to hold position and take advantage, particularly at the longest end. The short end and the medium term, which is 91 and 1 they stayed at the same closing rate of 2.5, 3.5. But the longest end, dropped marginally to 9.6 from 9.65. While the demand, particularly at the long end, was very, 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 very significant. 308 billion demand in 78 compared with the 79 billion offered by the government, and government sold 164. So actually, government oversold more than what it intended to sell because of the significant demand, particularly at the primary market. Well, on the balance of the fact in the securities market, particularly the fixed income space, is the fact that liquidity is very, very thinned out, and it's understandable because of the major liquidity that comes to the market, which is the open market operation maturity, has dwindled from about 1.5 trillion monthly to about 300 billion monthly. A significant drop in liquidity, which makes the bearish sentiment to continue.
Okay, now next week we were expecting the official inflation data from the National Bureau of Statistics. Although we have one of the analysts, financial derivatives company, forecasting 18.2% higher inflation, which is a pickup from the 18.12% that we recorded in April. So is that likely to have any impact on the fixed income market? What's your outlook for the fixed income market next week?
Yeah, for the fixed income market, the concern of politicians on the fixed income market is an indirect route, and it comes via the interest rate environment. The interest rate implication of inflation, higher inflation, means what I mean by that is that the central bank automatically looks at the inflation rate and adjusts the interest rate to tame the inflation rate. But you must understand that inflation rate in Nigeria is cost push. It's not caused by too much money. So the central bank recognizes that, and that is the reason why it's been doing developmental finance via trying to promote sectors of the economy that are growth enhancing. Having said all of that, inflation basically, like I said, is an indirect route, and it comes into the interest rate environment. And interest rate is elevated, like I said. The major reason why we have high level of interest rate in the system right now is because of two factors, basically. And that is the CRR implementation of the central bank. That's the cash reserve requirement implementation that sucks away liquidity from the system so that they are not speculating in the FX market. And secondly, the sharp drop in the open market operation maturities. Like I said, we're having about 1.5 trillion naira monthly maturity to dwindle to about 200 billion. That's a significant drop. So that has tightened liquidity. And central bank is not ready, even willing to increase that liquidity. And rather than increasing that liquidity, they're mopping up excess liquidity, liquidity remaining with the CRR. So that's a big factor. Inflation, like I said, is not a direct route, it's an indirect route. And if you notice, look at the demand at the primary market auction for the NTB. More than 300 billion were bid at the longest end of 78 billion offered, which shows that people are not closing at 9.64. 9.64, we take that away from the inflation rate of current inflation of 18.1, so that's a negative real return. But people are not even concerned about that. We just want to just preserve capital. So inflation is not a major driver of the market right now.
Okay, so now you've seen an uptrend in equities. It's as if maybe investors are shifting their portfolio from the fixed income market, from the debt market. Now, so anyway, I think we're running out of time. So thank you for bringing us up to speed on the fixed income market.
You're welcome. Thank you for having me.
Okay, so Ladi, that's the market for you. But I think with the array of markets that we have, the fixed income, equities, the currencies market, the commodities market, I think you can make your pick or make your recommendation.
Thanks for the update, Anita. Let's hope the bull resurfaces today after the session. Thank you so much for the update. All right, so we'll take another break now. When we come back, we'll do an opening call to London. Do stay with us. This is Business Morning.
right, let's see what's happening in London with Juliana. Good morning, Juliana. Well, inflation is a big issue for markets today. How are the markets in London bracing up for U.S. inflation data?
Good morning, Chimisa. You're right. Inflation anxiety or jitters are bound to dominate today, but it appears as if the square mile have priced in any inflation woes, because the FTSE is very much in positive territory today. Of course, as you said, we've got that US inflation data, which is likely to be released about lunchtime. I think investors are expecting a 13-year high of about 4.7%. This is from 4.2%, but they were expecting it to be about 3.6%. Then, of course, we've got the ECB meeting, inflation pretty high in the Eurozone. So lots of speculation about whether, all these $1 trillion, billion pound, euro stimulus packages are going to start to be reined back in, especially because the chief economist of the Bank of England, Andy Haldane, made some pretty noteworthy statements yesterday about the concerns here in Britain.
And there's some drama in the UK telecoms world too, with billionaire Patrick Dera's Altis Group becoming BT's biggest shareholder. What more do we know about this?
Yeah, some would say dramatic, some may say audacious, but investors appear to be happy. BT Group's share price has risen off the back of this news. So Patrick Drahi, he is French-Israeli, multi-billion euro business man. He owns the Altis Telecoms communications network. They have a firm here in the UK, and they've got networks across the world. They have bought, I believe, a 12.1% stake in the British Telecoms Group, meaning they are now going to be one of the largest shareholders. A little bit controversial because, of course, it's French, but then BT also have massive interest or massive investment by the Germans. Their interest is simply because, obviously, under OpenShare, which is what BT own, OpenReach, they are going to be rolling out full fibre broadband across the UK. Altis want to get in on that. They've already done this successfully across the world. So it's seen as a win-win. Are there fears? Possibly, but Altis have said they have no plans of going for a full-scale takeover.
And UK is pushing for City of London to be exempt from G7 tax plan. How are things playing out ahead of the meeting tomorrow?
Well, it's an interesting story. Of course, the whole world are kind of celebrating the historic beginning of the implementation of this global corporate minimum tax at 15%. That was the headline. But of course, underneath that headline is there is still so much work to do. And this story is just one of them. Rishi Sunak wants the City of London, particularly banks, hedge funds, to be exempt from this global corporate tax. He believes they pay enough tax. And of course, Britain don't want to lose the likes of HSBC and others to other regional hubs, which are also attractive, like Amsterdam and Paris. Still lots to do. According to the Financial Times that first reported the story, this was discussed last weekend. It will be discussed further at the G20 summit next month. And then, of course, much later with the broader global community at the OECD in Paris.
All right, thanks, Juliana. We'll still talk to you later in the day on Business Incorporated. Okay, let's look at the crypto market with Ladi. Well, Ladi, we saw some kind of push-up in Bitcoin, but how sustainable will that be?
That is the question. Well, Bitcoin has been able to bounce from that 31K range, but has not still been able to break the 40K range. Looking at the Fear Greed Index, we still have extreme fear in the market at 21 points this morning. Market cap, $1.60 trillion traded in the total crypto market. That edged up about 3% this morning. 24-hour volume, $121.42 billion traded. Volume did drop about 5%. Bitcoin dominance is still inching up about 1.41%. A look at price of Bitcoin, 36,678, up about 6% this morning. 24-hour volume, $51.43 billion traded in Bitcoin. Let's talk to Rume Ofin, our digital market analyst. Hello, Rume. Hello, Rume. Okay, seems we lost Rume there. Let's look at the chart now. Bitcoin still, flirting with this 200-day moving average, not been able to break it. But we could see an inverse bat head actually happen here. But it depends on what kind of news can actually spur Bitcoin to actually make such a move. The MACD is still, the histogram is still up there in the green. Volume is not so much at this point to push the price above this 200-day moving average. Let's look at the price of Ethereum, $2,500, of about 2.31%. 24-hour volume, $33.62 billion traded in Ethereum. Top alts by market cap, all up. BNB, $364, up by 0.91%. We have Cardano also inching up, but not as well as expected. You know, most Cardano bulls are expecting it to be above $2 by now. Dogecoin, 33 cents, up by 1.64%. XRP, still below $1 at 88 cents, up by 1.72%. Well, the top mover today will have Kusama. Kusama at $499, up about 12.95%. And we have the Bitcoin fork there. Bitcoin Gold, 11% up at $70. So it looks like when Bitcoin is actually, you know, being volatile, sometimes the forks actually start going up. All right, let's see if we have Rume now. Hello, Rume.
Hello, Laddie.
Good morning, Rume. Great to have you. Well, it seems that the meme stocks are the ones taking the crypto traders away, with Reddit communities pushing stocks like GameStop, AMC, BlackBerry. Are they losing the appeal for crypto market?
I don't think actually people are actually losing the appeal for crypto market. The crypto market is actually getting more traction than before. Like what is going on now? The Bitcoin conference in Miami just ended. The 2 days conference it took place about June 4th to 15th. But I think what is going on that is making you think that traction is leaving crypto is because majority of people are uncomfortable with crypto because as a tool of investment, because they don't understand what crypto is, and with that they are losing confidence. For the first time, a country like El Salvador has just made Bitcoin a legal tender. It has never happened before, and this is also a great news. And other countries are thinking of coming in, and you can see from what happened at the parliament, about 62 out of 84 voted for Bitcoin, and a lot of innovative drive will be going towards that country now, and people will be employed, and it's going to increase their revenue. I'm hoping one day it will happen in our own country. But again, a lot is going on, and yeah, a lot is going on. And the one that got my attention the most was that of the CEO of Paxful, Ray, when he said that Nigeria are exceptional. In fact, we have been able to prove that we are the lion of Africa with technologies like Bitcoin and the blockchain. You know, and we are not scammers, he said, and it was so refreshing because the world had the wrong definition of us.
That's really positive news, yeah.
Yeah. So I wouldn't say that it's swaying to crypto, out of crypto to memes stock. No, I don't think so. The market is just have its own dynamics.
Yeah.
And it's going to bubble back with full force very soon. We're still more than we're still $1 trillion capitalization. So the best is yet to come, and I will advise that every young person in this country should see a future in Bitcoin and blockchain technology.
Exactly. All right, Ruben, do you see the bulls breaking the 40K range?
Yeah, in a very short period of time, I think, like I said in my status the other day, that the bears very soon will get embarrassed. They are just seeing this great news from El Salvador is one step. El Salvador is about 6.45 million people, more like a state like Delta State in Nigeria. Imagine everybody there transacting with Bitcoin, and all that's gaining traction. Very soon, we're going to see a lot pushing in, and companies are already coming, and a lot will happen.
All right, Rumi, thank you so much. Always great to have you.
Thank you very much, lad. It's my pleasure.
Yeah. So, Jimmy, that's how the market is looking right now. T-Fuel down 13%, HNT
what
down.
Ruben said buttresses what one analyst I was listening to this morning on Bloomberg talking about Bitcoin and, of course, gold as a hedge, you know, for against inflation. And here we're talking about fears as regards global, you know, inflation. And he says look, Bitcoin is where to go. Well, I don't know about that because there's still
With how
this
volatile
fear.
Bitcoin can be.
Absolutely.
Yeah.
So for one to invest, it's always advisable that you do that with some kind of professional advice and then be able to take the right decision.
Yeah.
All right, that's a wrap on the program. There will be more updates for you on development in the world of business by 1:30 p.m. on Business Incorporated. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.